Everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it's Tuesday, and the market has been, boy, oh boy, it has been selling off. And basically, the excuse for today, at least that's what I'm seeing, is that they're concerned about the strong U.S. Data. But I half the time these headlines are just they're totally wrong. I think the reason that there's a sell-off is that the big boys in the hedge funds and all that stuff, they know that we're going into a recession. They're trapped in a lot of stocks. They're having to get rid of them, and it's painful for them. And so that's, I think, what's pushing the overall market lower. But who knows? I mean, every day, you hear on the news, well, it's this or that, and somebody, it affects things. I don't, I think in the long run, it's just that you have a lot of people trapped in some stocks they're having to sell, and that's basically it. The Dow Jones leader, Microsoft, fell more than 2%. And the concern, I don't know if this is really a concern or not, because you never can tell on these on these on these numbers. But according to reliable sources, so they say, basically the Dow Jones, I mean, there's going to be antitrust against their acquisition of Activision. I don't know if you're familiar with that company, but it's I you know $69 billion for Activision. I think that's way overpriced. Just my opinion. Of course, I don't have any insider information at all. But just my opinion, I think that's way, way, way overpriced for Activision. Here's currently what I am long. I'm long one thing, and that's BP, British Petroleum. Not a terrifically high price stock. The oil's got clobbered today. Price of oil has been trending lower. So the price of oil has been moving down. I did sell at a loss, unfortunately, my position in MRO. That is Marathon Oil. That's actually the E&P company, the oil company. There's actually two companies. There's MPC, Marathon Petroleum. They are in the retail business. They have like seven, stores, that gas stations and convenience stores. And then there's MRO. Now I probably should have had MRC, because they're doing better than MRO is. But it basically, I'm down to one stock long, and that is BP. Now with the shorts, I've been moving into shorts, basically in one account. And I'm gonna go over this just a little bit, kind of what I'm doing. I'm short Amazon, I'm short Nvidia, I'm short Apple, I'm short Google, which is Alphabet. That's the parent company, and I'm short the QQQ, the Invesco Trust. All of these were down today. 3% down for Amazon, 3% down for Nvidia. Apple was down 2.5%, 2.5% down for Alphabet, and 2.0% for the Invesco QQQ Trust. Now, of course, because I'm short, that helped me a little bit today. Had pretty good numbers. This is sort of kind of where I'm at in terms of sort of with what we've got, and kind of how much I'm up on each one. Now, remember, because these are short, the ones that are in red. At the more that stock goes down, the more the profit goes up. At least for me. Now, there's one, of course, long stock, and of course that's BP. But you can notice that I'm basically positive for all the stocks today, which is nice. But again, I'm short Apple, Amazon, Google, Nvidia, and the QQQ, which is the Qs. I'm only long BP, so this is like kind of where it's coming out. I wanted to show you something that you might be interested in, and this is what they call the short interest. What the short interest is that when we get in these kind of markets where they're starting to reverse and they're starting to move lower, many of the big funds will short them, meaning that they'll borrow the funds, they'll sell the funds, and this is reflected in what they call the short interest. And I've just kind of made a chart of kind of what I've got in terms of the short interest. Now, if you'll notice, the only one that has huge short interest as the percentage of the float is the Qs. And this is not surprising because when people short the market, when the experts short the market, they're basically saying here that they're looking for the market, at least the Nasdaq 100, which is represented by the QQQ, to go lower. So if you'll notice that the percent of short on the QQQ is almost 15%, which means that it it's at least the experts are shorting the market. They're saying it's going lower. That's what they're saying. Normal on some of these single stocks like Amazon, Apple, Nvidia, and Google, it's still it's a relatively benign short interest below 5%. So that tells you a lot. Also, I did make a little bit a chart here of the short interest change, meaning like where is it going? Well, the experts are starting to close their shorts on Amazon and the QQQ, but they're moving to short Apple, they're moving to short Nvidia, and they're moving off of Alphabet here. Probably with this information, I'm probably going to be closing my shorts relatively soon on the QQQ, Amazon, and Alphabet. Now, I took profits on Nvidia, but that seems to still be moving higher. So at least more of the experts seem to be saying that that is going to be more short. So I'm looking possibly to increase my shorts of Nvidia. So that's kind of in a nutshell, kind of what um, where you can say that. Where can we get your data from? Well, you can always watch the show, and hopefully, I'm kind of a small operator, so most of my stuff I actually do myself. I create it off of charts, and then I create more information. But thank you very much for that. I really appreciate it. This is Kitten Strength. Wow, I like that name. Okay, so let's see if we have some information here. By the way, if you are watching on TikTok, you can jump over to the YouTube feed to get a better look at some of these charts. It's a little bit easier to see them on YouTube. But I appreciate so much you taking time out of your day to take a look. Hey, Jim, you had a good trading. I did have it finally. This is Trucker 2 times from TikTok. Yeah, I fortunately today was not a bad day shorting. I'm going to be closing some of the shorts, hopefully doing some profit taking. I hope. hope. Thank you very much also for that great thing. Rumors say that Elon Musk is floating the idea of buying GM. Really, that would be very interesting. Well, you know what? I that would be very interesting if Elon Musk did buy GM. That would be very interesting because here's the thing that GM has that Tesla doesn't have, and that really is the ability really to scale beyond to scale. So that's very interesting. I mean, if he could buy it for 65 billion, that would be a deal. That would be a deal and a half. I know that, I don't have that kind of money, obviously, but that would be a deal and a half. So, man, he's the kind of guy that if he could buy it for $65 billion, that's not a bad idea. Now, remember, this was tried in the past. I don't know if you're old enough to remember Ross Perot, but he became the largest shareholder of GM when GM basically acquired his company called EDS, and then he became the single largest shareholder of GM stock. And of course, he wanted to change the company, and of course, the board and everybody else blocked him. So eventually, they had to buy him out, and they paid a gazillion dollars. They had to issue special stock, and then they ended up going bankrupt. So I'm not too confident with I think if GM was bought by Elon Musk, I definitely think that they might get better results. They really might get better results. So very interesting piece of information. Thanks for sharing. So appreciate it. But yeah, I mean, I definitely think if they could do something like that, wouldn't be a bad idea. Let's get to some of the questions. Thank you so much for everybody here. Hello, Jim. Do you think oil and gas play is off, coming back in near term? Winter has just started. Yeah, that's a good, very, very good point. that you're making. I do think that the oil and gas trade is getting a little bit tired. Again, I've done fairly well this year, trading oil and gas stocks. I mean, last year it was really the tech stocks for me, and this year it's been more of the oil and gas stocks. But I do think the trade is sort of coming off, and part of the reason I think this is because the price of crude oil and natural gas have been falling, and they kind of reached their peak basically back in June. Let's see if we can go and take a look at the price for. Let's see if I can get the price for oil for crude. Um, and this is part of the reason why I think that the crude oil play maybe kind of getting a little bit long in the tooth. A little bit long in the tooth here. So let's take a look at the screen for the price of crude. And as you can see, with the price of crude, we have been coming down now. We were rallying up to the 50-day line, but it's moved back. I mean, the chart kind of tells the story, and that is really we kind of made our intermediate high here at 123. This is the price per barrel of oil back in June, and basically since June, the price of oil has been moving lower. I mean, that's just a fact. So also we did have a rally in natural gas as well, but that too has been moving lower. Let's take a look at that chart really quick as well. Zero nat gas. And this one is interesting because it's much more volatile. And of course, this has a lot to do with the Russian invasion of Ukraine. But as you can see, same story here. It's also moving lower, and it's below the 200-day moving average. So it definitely did fall quite a bit. And as you can see down here in the volume spike, that we are starting to see more stuff sell. The relative strength is going lower. So here's the thing with oil and gas. Basically, since about July, August timeframe, they have been moving lower. So we did have a little bit of a delayed reaction in terms of some of the refiners and stuff like that. I still believe in the sector, but I just don't think it's as investable as it was before. So I just don't think it is quite as investable as it was. So that's kind of thing. So I'm a little bit leery, not leery, but I'm a little bit more cautious now with oil and gas coming into the new year. Um, but I do think that even with the thing about oil and gas is it typically takes about 3 to 6 months to sort of go through the pipeline. It's sort of like the pig and the python, the famous pig and the python analogy, is that crude oil will be high and then it will start to go through the pipeline, and eventually, even though the price of oil has come down, it still hasn't been refined and transported and sold. So unfortunately, the prices are going to be high this summer. But I do think that's definitely kind of baked into the mix with a lot of the oil and gas companies. So I think we got to be more careful with oil right now. We just have to be more careful with oil. But there's going to be opportunities. There's always opportunities. If there's change, there's opportunities. That's just how it works. You called it right. Yes, yeah. Shorting stocks. Well, the part of the reason is, I mean, I look at some indicators, and you get lucky now and again, but basically, um, we're just we're just in a situation where I'm afraid we're going to go lower, and it was appearing in the indexes. So thank you very much for that kind comment. I so appreciate it. Um, yeah, and definitely, the thing about shorting is that you have to close quicker. You can't really hold on to the shorts as long. I was taking profits on Amazon today, just trying to make sure that I didn't get whacked because that happens to me too. I short something and then there's a short squeeze and I lose it all and I give it all back. So I don't like to give it back. The thing about shorts are that they typically you have to take your profits much quicker, and you also have to close your shorts instead of 8% loss. You need to be closing them at 5%, and that can be very, very difficult. But hopefully, I'm going to be putting together some content here for everyone on how how I've been, um, how I do a stop loss on the shorts. So a lot of fun there, and it's going to be interesting. But there's going to be there's going to be money in the market. Let's look at Boyle for Lisa, and this is the natural gas ETF. So I'm going to move over here to Boyle and see what's going on here. There we go, Boyle, and this is the ProShares natural gas ETF. Let's see if we go there. Yeah, there we go. So with the ProShares ETF here, it is up a little bit after hours, but it has been in a downward trend, and this is a little bit concerning. And interestingly enough, it started right here at about June. There was a high here, and then we had another one that came in about August. You can see as the price of natural gas started to wane, unfortunately, the share price of Boyle started to come way down. And of course, this is a leveraged. This is one of the reasons why you got to be super careful when you are going with the leverage ETFs, because the change can be very, very rapid. As you'll notice with the Boyle ETF, of course, this is a 2x leveraged ETF, and it went down from basically 140 here in June all the way down, and it currently is trading at after hours 25. So it is lost. It has lost basically 80% of its value from basically from the time. Right now, it's trading beneath the 200-day moving average. You just don't want to be in this thing. This is why with the leverage ETFs, you've got to get out of them quickly. You've got to get them out of them typically when they lose more than 7%. You just have to make that rule. It's a very hard rule to enforce. I mean, I have spent more time not doing the rule than doing the rules. So, but I just would stay out of Boyle right now. The price of natural gas is trending lower. So right now you just got to be out of it. Leverage ETF. But it's just one of those things that you got to be out of this one. If you have losses in this one, I know that this is painful, but you need to take your losses quickly. And typically the rule is, of course, you never want to let losses run more than about 7%. Now, do I always get it on that right? Do I always get it right there? No, I don't. I took I took an 8.5% loss on MRO Marathon, which was set up nicely. I just, I took a little bit more than I normally do. If you keep it under, if you keep it to those kind of numbers, you're not going to, it's not going to affect your overall capital. So you got to be very, very careful on that. So anyways, Sandeep's asking about NVIDIA. And NVIDIA is a stock that I shorted. Let's take a look at it. I do think it's moving lower. And let's look at the chart on NVIDIA. Its symbol, of course, is NVDA. This is a great stock. I made money on this one going up, and hopefully we can make money on it going down. That's really the thing. It doesn't really matter in the market if you're making money going up or going down. The most important thing is to know the change, what's happening with change there. Now, with this one, we came right down, and interestingly enough, we are after hours. We are weak at 159. I believe that tomorrow, this is very, very likely to move below the 21-day average. If we look at the 21-day average, where that is right now, the 21-day average is at 157. Currently, we're at 159. Expect some resistance at 157, but I do believe we're very likely to go below that. And if we do, and sort of this after hours trading is telling us that this will move below the 21-day line. Let me see if I can go and show you a little bit better chart here, a little bit more kind of detailed chart. This is the little bit more detailed chart. Going at the 60-minute. This is the 60-minute chart. As you can see, we kind of, I started, building my short position here, and then I pulled it down. Now it pulled it as it moved down. Now it's sort of bouncing up, but it's still on this downward trend. And I do believe that it looks like it's going to break through support, and it's probably going to go lower. It's probably going to go lower tomorrow. Now, here's another thing to look at. Typically, you don't want to short a a stock if it's been down more than 5 days in a row, because typically there'll be a little bit of a relief. So let's find out how many days this has been down. One, 2, 3. So I think we're okay probably to short here. Would could you initiate a short here? Probably not necessarily the greatest place to initiate a short, but you definitely, if it falls below that 21-day line, then you could probably initiate a short there. I'm probably going to build my short here and then move my stop loss down so that if we get a relief rally, I'll be out. So right now, I think that the thing about Nvidia is it's probably going lower. The checklist is poor, 44%, and on the pattern recognition, it's definitely moving. Um, it's definitely well below the pivot. The pivot was way up here at 235. So definitely think Nvidia is probably going to go lower tomorrow. That's my guess. But again, it's really it's funny. It's easier to figure out long term what the weather is going to be than what it is going to be tomorrow. So that's what the problem I always have is figuring out not just what's going on, but what the weather's going to be like tomorrow. But I definitely think that Nvidia very likely to go lower, very likely to go lower. Thank you very much, Doc, for that nice thing to say. Can you explain what defines an uptrend or a downtrend? Very, very good. It doesn't feel like we're in an uptrend. Well, I don't think we technically are. We're sort of in a downtrend, but here's how it goes. No, and what I'm doing here is I'm moving over to the spider SPY. I'm gonna move over to the index. Let's take a look at the index, and that's zero. I'm going to look at the S&P 500 index. I'm looking at the S&P 500 index. Okay, so here we go. I'm putting that chart together. Okay, now you think, well, it doesn't appear like we're in an uptrend. Well, we are overall. We're in a downtrend. Okay, and as you can see, it's basically this is the downtrend, but it doesn't. Nothing goes down straight. It'll come down and then it will rally up to typically resistance. It will come back down, rally once again, and then come down again, and then rally right back up, and then down. And now we're in this rally, but the rally is running out of steam. Okay, the rally is running out of steam, and basically, what's happened is it's come up to that 200-day moving average, and that 200-day moving average is sort of that's the ceiling. So now it's kind of gotten some resistance, so it's going to come down. My guess is if we look at this chart and we look kind of at kind of the volatility here, it's going to come down somewhere below 34. So I think we're going to be at 32. That's my guess eventually. But we're going overall. We're going down. There we go. There we go. Overall we're going down. That's the sort of the line on the top there. But we are in this kind of relief rally. Sometimes they call these things dead cat bounces. Okay. And what happens is it comes down, it hits that floor. You're throwing that cat on the floor. It's bouncing up, but doesn't quite get up as high as it came before. See how it's kind of making new lower lows here? In general, the overall market trend is lower, but we're in this relief rally. So that's why it's very confusing. It's very, very confusing because we're saying, oh, well, we are in confirmed uptrend, which we are. It's just that confirmed uptrend is part of making lower lows. So it makes lower low here, lower low there, and then it's making lower low. So that's kind of the deal. Now, if you'll notice on the front of my slide, if you look at the deck here, what I do is I always put I always put a little symbol, and this is a green circle. Now that means it's a confirmed uptrend, but that's just the market. I mean, that's just the intermediate. That's not the overall market. That is the trend basically in the last month or so is an upward trend. But overall, we're in a downward trend. I know. I hopefully that makes some sense. It's kind of confusing. It's kind of confusing, but that's sort of the way we're. So we're in an overall downtrend, but we're in this relief rally. So that's kind of where we're headed. All right, let's take a look at TIPT. All right, that's interesting. Let's TIPT. So let's look at that. TIPT. And there we go. Tiptree. And switch over there for everybody watching on TikTok. By the way, if you're watching on TikTok, I am broadcasting this live on YouTube. So it's easy to get to. Just go over to youtube.com/Dell's Trading Floor. All right. This is Tiptree. Now, this is definitely in an upward trend. And interestingly enough, my charts are showing very strong relative strength, 95. That means in the top 10%, the top 5% of all stocks out there. And there was strong buying today. Don't know the reason for it, but we're definitely in a cup pattern. Now, when stocks are moving higher, they move through these things called bases. This is a base called a cup base. All right. You see how kind of this green line has been drawn for us here? We're moving right up. And if you look at the 10-day moving average, that's this right here. There we go. You see how it's to the top of that? So each day it's been moving higher. The question is why, and can that continue? Well, it definitely looks like something's going on. Somebody's accumulating this. When you see this kind of action where it's basically 1, 2, 3, 4, 5, it's just every day is accumulation. That means that somebody out there, and we don't know, of course, who it is, somebody is looking to buy that. Now, interestingly enough, let's see who. Okay, so this is somebody is buying this, offers insurance policies. Okay, so this is an insurer, and let's look at the ownership on it. Yeah, this has been steadily increasing. So we've got 200 people in this. Interesting. Let's look at the funds that are in this particular issue here. Let's pull that back here. There we go. So a lot of A plus funds in here, a lot of good funds in here. If we're looking for funds, A plus, A plus. So this is looking good. So a lot of these small cap value funds are moving. Yeah, this makes total sense because this is a very defensive play right now. Many of the funds that have to stay invested, and they want to stay. They want a kind of a risk off situation. Insurance definitely provides that because of the guaranteed income that insurance typically has. So that makes kind of sense why they would be looking at this one. But a lot of very, very good funds are in this. So this tells me, you could definitely follow along with them. Now, insurance is not a particular favorite area of mine, but in this kind of market, it's not necessarily a bad place to be if you have to be invested. So I, I I I like it. It's got a 78 checklist. I probably would not be buying this one. I probably just wouldn't be buying this one, but this is not bad. This is a good chart, and so if you did want to put some money to work, this might work well for you. But this is a very defensive play. Insurance typically is that way. So, but if you need capital preservation, this might be for you. This definitely might be for you. All right, let's look at. Also, let's look for Charles here. CEIX. Let's see kind of what's going on here. CEIX. And that is Console Energy. Okay, so it's a Appalachian area. Interesting. I'm not totally souring, of course, on the I'm not totally souring on the oil and gas plays, but I think that they're getting a little bit long in the tooth. This had come out of a very nice cup with handle base, pulled back a little bit below the buy point. I think it looks like it's definitely getting some support here at the 10-day line. Let's take a look at that, where that 10-day line is. Yeah, it's very good. It's a very good checklist. Basically, an 89 checklist. That's excellent. On the technicals, Yeah, we could still buy this. It's slightly it's above the it's not 5% above the 21-day line. That's not a bad place to buy it if you wanted to move on here. But it does look like it's going to get some support. It's basically right on the 10-day line. It does look like it's going to get some support at the 10-day line. So it doesn't look so this definitely is moving is going to move, but it's going to basically what's going to happen if we draw the reversal line here. That's how you want to do it. You want to set that is that want to set a reversal there. If it moves above that, that's where you want to buy it. But you want to buy it on strength. And it does look like, you know, there have been fewer people willing to sell it. So this it does look like this is under accumulation. I would be a little bit careful about the group just because right now I'm not souring on oil and gas, but I'm taking a kind of a wait see attitude on it. I'm moving on a kind of a wait see attitude. Question from TikTok: where do I get my information? Well, um, I primarily use a tool called MarketSmith. It's available from Investor Business Daily, and I like it very much because it has a lot of information in one place. That's where I get a lot of my information. So, thank you for bringing that up. I don't get any money from them. I should did. Um, and somebody's saying, "Can I ask you a question?" This is Mason Tomik, I guess it is. Sure, you absolutely can. Ah, best way the easiest way for me to see your question, of course, is on, if you're on TikTok, just put it up and hopefully I'll be able to see it. This is great. Hey, thank you, Ben, for watching. I really appreciate it. Okay, where's the market heading tomorrow? Well, I do think that based on kind of what I'm seeing, I think we're going to have probably one more down day, but I think towards the end of the week we might see it. We might see the market move up. I definitely think that we're in a kind of a sell-off period. Based on what I'm seeing. So it's very very hard to tell overall. But let's look at let's just look at the S&P 500 because that's going to give us really that gives us really probably the best look. I'm going to look at the index itself. Let's see, S&P. All right, it's S&P 500 index. So let's just look at the S&P itself. Um, we've been in a downward trend for the last 1, 2, 3, 4 days. And it did pull below the 21-day moving average. So I do kind of expect we're going to see probably another down day tomorrow. That's kind of my guess. But then after that, I think we're gonna move higher. So I probably going to be looking to close some of my shorts tomorrow. And if we do get a bounce, because I want to capture that money there. So that's kind of what I'm looking at. But I do think we're probably gonna go lower tomorrow. It depends on how we open. Um, and whether or not we can hold it until the end of the day. But I do think we're probably going to open probably a little bit higher, and I think we're going to close lower tomorrow. That's just kind of what I'm seeing. All right, let's take a look for Amazon and Tesla seem to drop lower. Will we have any uptrends by the end of the year? Boy, that is a great question. I wish I could say that I thought that we're going to see some nice uptrends here, but I'm not really seeing it. If we look at Amazon, this is one of the reasons I'm short Amazon, is because I just don't think this is gonna be a very good year for Amazon. I think the shopping season is off to a bad start. Um, I don't mean to be a negative Nelly, but I mean, I'm walking around in stores and, there's no crowds. And you would think, I mean, here in Dallas, I mean, this is a shopping city and there's almost no crowd. So I think that, yeah, I think with Amazon, we're very likely to go lower. I mean, it's up a little bit after hours, 88.52 in the after hours trading, but I think that we may get a little bit of a leg up here, and then the rest down. I've actually have my short here, so I'll be closing it if we do get too much of a bounce. I will close it to take the profits. But you're right. I mean, I think that looking forward here, at least in the next few weeks, I see Amazon moving lower, and I don't I see I potentially if we look at this, we're down to the point where we've given up all of the gain in Amazon pretty much since June of 2020. So that's a lot, and I think that we're likely to see it move even lower. That's where I see it, possibly bottoming out is, at believe it or not, at about 66. That's where I see it bottoming out. But right now, the trend in Amazon is down. So, it may rally tomorrow, but I think, at least towards the end of the year, I think we're looking at a lower, to the end of the year. So I think we're going to go on Amazon down to maybe, in the first quarter, I think we're going to be in the 60s. I really believe that. So, anyways, okay. Charles is asking, looks good. Oh, 16 out of. Okay, yeah, cool. TH. Let's look at TH. Now, when something's gone up that much, you definitely want to look at. Matt's right about that. But Target Hospitality, okay. Well, this, at least it is an airline. That's for sure. It's $14 stock. Yeah, I mean, it's a little. This is a little bit thin. Well, this is a little bit thin. Relative strength is 99 though. That's very good. It's coming out of this base. Yeah, I mean, you could make a point. You could make a case for it. You could definitely make a case for it. There's strong earnings. That's the key. Wonder what they do. Okay. Yeah, look at that. They just came out. Look at their sales are up 78%. That's really good. Excellent earnings. Oh, the Woodlands. Interesting. That's interesting. Target Hospitality provides specialty rental accommodations with catering and value-added hospitality services in the U.S. That is really interesting. So that is an interesting company. I actually have a rental house down in the Woodlands, so that's interesting. Thank you for that. That's an interesting chart, looking pretty darn good as well. All right, let's see if we have any questions. SPX. This is SPX. Let's see. We're almost at the end. SPX. There we go. No, did I get that right? Maybe not. I think I'm a spider. SPY. And of course, that's going to follow the spider is going to follow the S&P 500. It's just the ETF that covers that. So there you go. And this is what I've been really keying in on. I do think that we're going to see it move. I think we're going to see the spider move lower. I think it's reversed and it's probably going to go lower. So that's kind of my trend line as I'm seeing it on the spider. So there you go. All right. ExxonMobil. Do you think it's going to go to 90? Good question. That would be interesting. I like Exxon a lot, but it definitely has been in the last few sessions. It's been pulling lower. Absolutely. And so the question is, will it hold that 50-day line? It doesn't look like it. I mean, we might get it to rally. Well, it's rallying in the after hours, so that's interesting. It's rallying in the after hours, so it definitely looks like it's going to get some support at the 50-day line. Still, it gave up all that gain. It went all the way from 105. Look at that. Went all the way from 105, and basically it's 103. So all that great gain that we had, it's given up. This is one of the reasons why I like to take profits in this market pretty quickly at about 10% and then up to 20%. So above the pivot. Um, yeah, I mean the relative strength line tells the tale. Will it go down to 95? I don't know. I think it's going to I think you're going to see some support. I think it's going to get some support at the 50-day line. That's my guess. Let's look at the technicals here. 50-day line. Yeah, I think it's going to get some support right, but probably between 100 and 105, and it's at 103. So I don't know if it's going to go down to 90. I would be surprised if it did. I would be surprised. I think it's going to get support right about 100. Can we rewatch your lives? Absolutely. By the way, yeah, you just go over to you just go over to www Dallas Trading Floor, and you'll be able to see all the lives there. Also, I'm on Rumble. if you're interested in that one. I'm on Rumble. Just go under Dallas Trading Floor. Just subscribe it to it, and you'll be able to see all the old shows. So I typically do try to do a show every day. Sometimes I miss, when I'm like out of town. I was in Mexico City 2 weeks ago, so I didn't do them then. So, but I try to do as much as I can. Sarah is asking about SLV. Let's take a look for SLV. Let's see what's going on. And this is the Silver Trust. Now, I know that I'm going to sound terrible. I am not really a gold bug, and I'm not a gold bug, and I'm not really a silver bug. Even though everybody's saying, well, we're going to have all this inflation, that's the thing to buy. I don't think so. I think the better place to be is in cash or possibly in an inverse bond fund. I want to show you the difference in this and why I think this. Okay, the silver trust has moved up above the 200-day moving average, but if you look at it overall, and that we can do that here with this. Let's look at it. This is the silver trust, and I'm going to show you comparing that to the TBT. This is the inverse bond fund. Okay, and let's pull over there so if I can. All right. So what I'm going to do is I'm going to show you. This is the silver. This is silver against the bond fund. All right, and then I want to show you this because I think it's very it gives a good. Let's go there. Okay, so here we go. So I'm going to do that basically since for the last 6 months. So 7/1/2022, and I'm going to compare how well things have done. Now they've almost equaled. Okay, and silver is on the upward trend. This is the bond fund, but overall, the bond fund has, at least from here, has outperformed. Now the question is, if we put in gold there, I want to see how it's compared to gold. Yeah, gold has basically been very stable. If you're going to buy a metals, I think, and everyone says to buy silver because you're going to get more of a movement upwards. I don't agree. I think that gold is the thing to buy. It's really the only, if you're gonna look for the stability. If you want the stability, you want to buy this one, GLD. And again, that really hasn't gone anywhere in 6 months, but it hasn't lost anything either. So there you go. So there you go. So very interesting. TBT. This is the TBT, and let's go to the TBT chart really quickly. All right. So this is the TBT, and what the TBT is that it's an inverse of the 10-year treasury rate. So as the rates are going up, typically it will go up. Now this has been kind of in response, I think, to basically in October, to kind of knowing that we're going to probably slow down a little bit the raising of interest rates, but this is with the interest rates um, boiled in here. So we do have stabilizing interest rates. Interest rates are still going up, but with the TBT, the TBT is falling. So the question is, do you how do you what are your objectives? If your objectives are capital preservation, I think if and you need to be in someplace, I would go with the gold ETF, GLD. You're not going to make much money on it, but you're not going to lose money on it either because it's typically pretty stable. There we go. Yeah, it's typically pretty stable. It's coming up to the 200-day line. Um, but really, the best hedge, I believe, is basically to be in cash. That's what I that's kind of what I think. Okay, last question is going to be on the UPRO, and the UPRO is the inverse of um, the UPRO is the inverse of the S&P 500. I like I the way I when I, here's what I do with the UPRO. Whenever there's a change in the general direction of the market to a confirmed uptrend, I buy the UPRO on the first day. Um, and I've been successful doing that for a long time. Now I don't buy it after that. So if you were to go, let's say, to take a look here, you'll notice. Okay, let's go back here. Um, on my slide deck, there is a little green arrow. I mean, a little bit green circle. That means that it's in a confirmed uptrend. The day that that changes from yellow or red to green, that's the day I believe that you need to buy the UPRO, but you only can really buy it in the first 2 or 3 days that there's a change. Other than that, I don't think that it's probably the right thing to do right now. Again, I would stay kind of in cash, waiting for a short or waiting for a change in the market. So that's kind of my take on it. Well, thank you everybody for taking time out of your day to take a look at my little show. If you're not already a member of Dallas Trading Floor, super easy to do. Just go to www.dallastradingfloor.com. And also, if you could like the show, it really helps us get out there. Eventually, hopefully, I'll get picked up by somebody that could do better, that could be more damage. But until then, please not do a little like, do a big like by smashing that like button and smashing that like button. I'll be back tomorrow at I'll be back tomorrow at 5 o'clock. Hopefully, everyone is having a good day here, and hopefully, I'm gonna probably be shorting tomorrow. We'll see what happens, but I will be back with more um, on Dallas Trading Floor tomorrow at 5. Happy trading, everybody.